Microsoft is scheduled to report quarterly financial results after the stock markets close on October 29th, 2025. Investors are asking me if they should buy the stock before it announces earnings or after, or even if they should buy Microsoft stock at all. So I'll answer those questions in this video. I'll preview a little bit of what investors can expect from Amazon and what they should hope for from Microsoft, I should say, not Amazon, and why this stock could or could not be a buy going into the earnings results.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So when Microsoft last reported results, they were really impressive, and they've been pretty impressive for several consecutive quarters now. For one, revenue is increasing robustly in the most recently completed quarter. 18% growth, revenue jumped to $76.4 billion. And this kind of revenue growth is more meaningful for a company like Microsoft because they have such lucrative profit margins. The gross profit margin is at 69%, or $52.4 billion in total gross profit. And their operating profit margin is an impressive 45%, or $34.3 billion in total operating income, which was up 23% compared to the same time last year. And this is amid significant investments from the company in artificial intelligence. And despite all those investments, they're still growing operating income by 23% year over year. Now, a lot of that has to do with how they account for all of these investments. Most of their investments in artificial intelligence are capital expenditures. So those go on the cash flow statement as investments in property, plant, and equipment. And then they go into the income statement as depreciation over several years. So let's say Microsoft spends $100 billion on capital expenditure, which isn't far from what they're going to spend this year, closer to $80 billion. They don't recognize that $80 billion on the income statement immediately. First, it goes into capital expenditures, and then it goes into the income statement as a depreciation expense over 3 years or 5 years or 7 years, depending on the duration of the assets they're investing in those capital expenditures. So partly that's why their operating income is still soaring, but their operating income can continue soaring if revenue continues to increase at these levels. It will offset the increase in depreciation expense. Another exciting fact for Microsoft stock investors has been the increase in the backlog. So what I mean by backlog is the orders or the contracts it has for future revenue, and those have been increasing substantially. You can see here commercial remaining performance obligations in fourth quarter fiscal year 2024. This totaled $269 billion. That's increased significantly to $368 billion in the fourth quarter of fiscal year 2025, which was their most recent update. I know it's different than the calendar year. We're still not in the calendar fourth quarter of 2025, but companies are allowed to have fiscal years and fiscal calendar quarters that are different from the calendar quarter. It's annoying, I understand, but you got to complain to somebody else other than me about this. I don't make these rules. I just follow what I see. Now, another exciting thing about this is the increase in the growth rate. In Q4 2024, their growth rate was just 17% in this category. In fiscal Q4 2025, that growth rate was 37%. And the overall figure is an increase of $100 billion over these 4 quarters. So this includes deals that Microsoft has with OpenAI for the computing power to support ChatGPT. It also includes other arrangements with other cloud customers that are purchasing computing power from Microsoft. And this is why Microsoft is investing so aggressively in building out its data centers optimized for artificial intelligence, because they're seeing this kind of demand from customers. If you have a category of your business that in 1 year increased by $100 billion, or almost 50% year over year at such a large scale, wouldn't you also invest in that category to support that kind of growth? Especially because at this level, at the current level, demand for that service exceeds the supply for that service. So you're in a category where there's growth of 100 billion in 1 year. And at the same time, that category, your customers want more than you actually have to give them. So wouldn't that be a great category to make your investments as a business? I think so. And I think these companies have been prudent, relatively prudent. It's hard to say precisely because the numbers are so large, but they've been relatively prudent in their investments. They've consistently had that deficit where demand exceeded supply. So even though they're investing so much, they're careful not to invest so much where they're way above what the demand picture looks like. Still, there is the risk that all of the companies combined in this category, cloud services, which include Microsoft, Amazon, Alphabet, Oracle, that they're making all of these investments right now based on what they're seeing from customers right now. And there is a risk that they overinvest and you have this overcapacity. So that risk still remains for, let's say, 2 years down the road or 4 years down the road when all of these data centers are up and running, right? A lot of the construction that's happening now is going to take 12, 18, 24 months to be ready to be deployed where businesses can actually use that computing power. So this is the category I'm going to be looking very closely when Microsoft reports their quarterly results. What is this number for fiscal 2026 Q1, their commercial remaining performance obligations? Is it 400 billion? Is it something lower? Right? So that's something to look out for. If it's anything 400 billion or above, I think investors are going to be extremely happy with Microsoft. If it's anything below 368 billion, investors will be disappointed. We did see one sequential decline over these previous 5 quarters. Last year, from Q4 to Q1, they did have a decline sequentially from 269 to 259 billion. And given that in the most recent quarter from Q3 to Q4, their backlog increased by 53 billion, which is the biggest increase over these 5 quarters, that maybe there was some pull forward and there's a gap and there's a sequential decline. So a lot is riding on this figure for Microsoft stock investors. So should you buy before earnings? Well, I have a proprietary discounted cash flow valuation model I use to calculate the fair value of Microsoft stock. I updated this calculation today. The fair value I calculated is $491. Current market price is $523, so the stock looks fairly valued based on my calculation. And if I go to fiscal.ai, which is my preferred data provider, there's a link in the description if you want these kinds of charts where you can see a company's forward price to earnings ratio. Microsoft trading at a forward PE of 34 also looks fairly valued to me for a business that's growing at the rates that it's growing with the kind of profit margins and competitive advantages and the tailwinds it's experiencing from artificial intelligence. I think it's a fairly valued business. I also think it's one of those Hall of Fame companies where I wouldn't mind buying at a fair value. Now, should you buy before or after earnings? I don't see any reason to rush in and buy before earnings. I also don't see any big downside for doing that. And when I've encountered these situations before, the advice I give to people that ask me is what I would do is if I'm thinking about spending, let's say, $1,000 for Amazon's, why do I keep saying Amazon when talking about Microsoft? I don't know. Anyways, the purchase allocation, I would take the $1,000 and split it into 500 and 500, and I would buy 500 before the earnings announcement and 500 after the earnings announcement. And that way I reduce the risks on two sides, right? On the one hand, if you wait until after the earnings results to purchase, you run the risk of missing the upside. A lot of times there can be numbers that come out during the earnings results that send the stock price 20, 30, or even 40% higher, as we saw with Oracle's results, which sent its stock price 40% higher. So if you don't buy before, you risk missing out on the upside. But if you buy before earnings, there's a lot of times when the stock price falls by 10, 20, 30, 40%, as we saw with the Trade Desk. After they reported earnings, their stock price fell by almost 40%. So you have that two-sided risk here. But if you do half and half, you reduce each of those two sides of the risk, which is what I would lean towards here with Microsoft stock.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.